Cool beans. Welcome, everybody. Welcome to the midweek fundamental and technical analysis. Um, Before I jump into it, let me give a quick disclaimer. As always, this is not financial advice. Anything that we share during our analysis is for educational purposes only. I repeat, this is in no way financial advice. Everything that we share during our analysis is for educational purposes only. Cool beans. Cool beans. So, looking back over the beginning of the week, technical analysis, I told you guys that I wanted to see us reach up into these monthly PD array levels. I also told you guys that we had high impacting news coming out Wednesday, Thursday, and Friday of this week. So, um, these levels down here was the levels that I wanted to see the dollar pull back to on Monday, right? But being that we just pulled down to these levels today with this high impacting news, um, I want to see how price play out throughout the rest of Asian and going into London, right? Um, I still want to see us run up into these monthly PD array levels. I just don't know whether we get there by the end of this week or not, right? We do have high impacting news tomorrow and Friday. And so price is gonna be all over the place to be honest. Um I wanted to see us break in one direction, above or below this fair value gap. Um I can actually move that now. I don't need that anymore. And let's see how price respects this daily fair value gap that we're currently sitting inside of. Being that we did pull back down into these daily PD arrays today, and the way price snapped back off of those levels, I do expect the dollar to continue to the upside to run these monthly PD arrays. And let's just see how price plays out throughout the rest of Asian and going into London, whether we are inside of this daily fair value gap, above it or below it by the time the New York AM markets open in the morning. Cool beans, but my bias is to the upside. I do want to see the dollar push up to close the week. So with that being said, um, we came down into the PD arrays that we wanted to see price come down into from Monday, right? Came down into them. And then today gave us a nice push up off of them. So if the dollar continues to push us down, then of course we expect euro to continue to the upside. But like I said, let's see how price plays out throughout the rest of Asian tonight, going to London, whether we're sitting inside, above, or below this matter of fact, go ahead and tighten that up to right beans. So let's just see where we are relevant to this fair value gap when the New York markets open in the A. All right, so let's just monitor price throughout the rest of Asian and going into London. Uh, I would, however, like to see Euro continue lower to hit that lower monthly PD array level and possibly this monthly sell side liquidity. Um, like I said, might not be by the end of this week, might take us a few weeks to get down to here, but this is on the side that my bias is on for Euro USD is to the downside. You mean? Same thing across the board with the pound and NZD USD. I want to see us come lower. I'd like to see us come lower. So let's see how price plays out throughout the rest of Asia and going into the Same thing with NZD/USD, guys. I would like to see us come lower. Today we ran this high from last Thursday. So let's see if that was enough of a liquidity. We ran these equal highs too. So let's see if that was enough of a liquidity grab to push us lower for NZD/USD. Cool beans. Cool beans. And with futures, I told you guys Monday that I did want to see us push higher and create new all-time highs. So we did get that yesterday and today. And I would like to see ES pull back down into these daily PD arrays, right? These down here are still um my target that I would like to see price eventually come to by the end of the week or sometime during next week, right? Um, However, with high impact news coming out tomorrow and Friday, we could see futures just continue to run higher until we run out of gas. So um, yeah, I'm very interested in seeing how futures play out for the rest of the week. So same thing for NQ. I like to see us pull back down into today's PD array levels, right? And if we get down into these PD array levels for futures, and if we're around this area when the New York market open, then I would look for a buy off of these levels to continue higher. If we haven't just exploded through these levels and closed below them before the market's open, I will look for a buy to come back up and run today's high. And then that'll be enough for me. You know, I'm not gonna sit in and try to ride it higher than today's high. Um, and if we break below these PD array levels, then I would be looking to take a short down to Tuesday's daily PD array level. Cool beans? Cool beans. So that pretty much wraps it up for the midweek technical analysis. At this time, I will pass it over to Corman so she can give us the midweek fundamental. It's all yours, man.
All right. I told you guys on Monday that I was going to come here and talk about crypto and that we were going to talk about the Fed meeting as well. So, um, I am going to do both of those. I was getting ready to say I was only going to do one, but I'll go ahead and do both. Um,
Give us that sauce.
you know what? I was only going to do crypto because at this point in time, I told you guys Monday, um, this is the time of the year where it's really a make or break time of the year. And I feel like um let's see. Let me see how I can put this so that everybody can understand. Um if the rest of the world and our economy were Kendrick Lamar, this Fed and this current administration is like the definite personification of Drake right now. Like the manipulation is funny, but at this point in time, it's just like it's kind of annoying because the rest of the world is showing you who you are. They're showing you who you are because at this point in time, like nobody wants to deal in the US dollar. Everybody's laughing at us. Everybody's making fun like of the country, of the US dollar. how the administration's working, the age of the administration, how the Fed is working, how the Fed is managing the dollar, the Treasury, how the Treasury is managing. Could you fathom needing to pay a little over $1 trillion in interest on your debt? That's a lot of money. That's the US right now, like paying over $1 trillion in just interest, not paying down the debt. That's just interest. People don't even think about these things. Consumers are actively, as I showed you guys and as I told you guys on Monday, they're paying down debt. That COVID money, stimulus money, business money, money that people use and that has now grown. People are using that money to pay down debt. But you mean to tell me that our country, the people who run our books, can't pay down debt, and we're accumulating all of this interest, accumulating all of this debt, because remember, we're still accumulating debt as time goes on because we're constantly spending out money for certain programs. Certain programs are over budget. So they say they borrow money from another area in the government that then either may or may not need the money. And if they do, then they turn to another area and then they turn to another area. So when this circle, or when the cycle, whatever, keeps going, and you get to that last entity, who are they going to ask? Like, everybody has to be able to ask somebody. So you have to ask yourself now, who is that company? Who is that division in the government going to ask? They're going to ask the Treasury. The Treasury is going to then turn to the Fed to see if there's something on the back end that the Fed can do. So what the Fed will do is typically turn to a banking institution, whether it's Citibank, JP Morgan, Goldman, HSBC, pick one, and say, hey, we need this amount of money because we need to put it here. Sometimes they don't even have to have a reason why, they just ask for it. And now you have IOUs all over the place. But then those countries extend out IOUs. But the IOUs that we have, they just sit really heavy because you're supposed to be the number one country on the planet. You're supposed to be this huge entity that everybody looks to, everybody rocks with, and no, nobody does. You find out when your business gets put out in the streets that nobody's really rocking with you, and the people that do are lame. Sorry. Because it's like, yeah, people that live here complain about living here all the time. And when people travel to other places, it's like, man, everywhere else in the world is so great. But people here, side note, tend to be very comfortable with just being here because this goes back to a lot of things that I've said before. And if you don't believe that this is going to become a thing in the next year to 3 years, okay, watch me. Americans not knowing any other languages other than English is going to come back real hard, and it's going to bite real bad, because everywhere else in the world, English is either the first or the second language, sometimes the third or fourth language learned. People here crack jokes and laugh at people that have accents and stuff, but an accent to me means, dang, like your first language isn't English. So then I want to know, what is your first language? That means you're versatile. You can go anywhere in the world. You can do anything you want to do and be okay. Americans know English. They know accents. They can imitate very well, but they can't produce when you put them in other places. So you're stuck. Most Americans feel stuck here because it's like they can't go somewhere else and thrive and be good. So when we start thinking about the Fed meeting today, and we start trying to bring all this back in and tie all these concepts together. The biggest thing that I took away from the Fed meeting today is that the job numbers are manipulated. In no uncertain terms did Jerome Powell allude to that fact. Like, job numbers may have been inflated. They were. Or overstated. Sorry, the word was overstated. They're undecided about whether or not they should raise rates. And here's the thing, like, there was a comment that was made about, we don't really know why the American people see the economy so negatively. That lets you know that the Fed has their head in the clouds. They don't read, they don't listen. Now are you seeing the similarities between Drake and Kendrick in this whole mess? Like, it's a lot of similarities. If you just want to be like pop culture synonymous, or like, find something that's like relatively similar in all of this, it is very, very similar. Like, right now, our Fed head in the clouds, don't know what's going on with the little man, and they're up here on national TV saying that they don't understand why people are so negative. Well, I can tell you a few reasons why people are negative. Tell you a lot of reasons why. It's the things that World Economic Forum has already said were going to happen. The change in innovation when it comes to AI, technology advancements in retail and fast food, in the car sector, in the metals and our manufacturing sector, automated, can't find jobs. Now you have regulation that came down from the federal level that states are rejecting, which is now causing people to lose their side hustle jobs. They can't drive Lyft, can't drive Uber. There's several states where you get taxed so hard for driving, people don't even do it anymore. They've actually brought back yellow taxis. They've actually brought back public transportation in bulk just because. So those kinds of comments to me are very, very scary, coming from an entity who's supposed to be so boots on the ground, so out there with the public in their different regions, talking to people, talking to leaders, and knowing what's going on. That is such a comment that is like a backhanded comment to make. We didn't change rates because they're undecided. The only decisive thing that came out of anything that I heard today was that no one wanted to raise rates. Well, duh, obviously. You have citizens that are struggling to buy groceries, to deal with the inflation that we did have from COVID, that didn't change, didn't lower. If anything, the only thing that changed may have been the fact that you got shrinkflation. And if you don't know what shrinkflation is, it's okay, you go to the store, you buy a candy bar, it's $1. And let's say that candy bar is like, I don't know how big a candy bar is. Let's say 3 ounces. Well, 3 ounces for a $1 candy bar. And then they raise the price to $1.50. And people are like, $1.50 for this? Well, then they'll turn around and shrink the package to 2.5 ounces and drop the price down to $1, I don't know, 15. And then they might make multiple sizes and will drop the size again to, like, let's say 1.75, drop that price under $1, keep the packaging size the same, but drop the contents inside the package down. So people are seeing that, people know that. And those are the things that kind of slap you in the face during a time like this. So eventually, for me is like a 6 month to 3 year time frame. It's how I'm seeing it. We are going to get to the point where the Fed is going to completely try to transition people to a more digital system. And I said try, because remember what I said Monday, you got to do it, and you got to put people in it, let people rebel, do the whole psychological warfare type thing on the masses. Throw it at them, let them be mad, keep it in their face, pull it completely back, take it all away. Take it all away, say, you know what, we're going to rethink this. And then they're going to come back and throw it right back in your face. Make very few changes, but make a lot of promises with it. Oh, we revamped it. We made it better. There's more security, no hacking. It's tied into your bank. So it's really not different. It's just like changing your account number to a wallet instead of like an account. It's the same thing, but like that. Then slowly but surely starting to get people used to wallets, long addresses, QR codes, scanning things, doing things on your own, making it seem like it's cool. So the example I gave you guys of Walmart on Monday, I think eventually it's going to get to the point where it's going to be flipped. So when people say, oh, I have Walmart Plus, whatever kind of service, and I'm still having to pay to self-checkout or whatever, it's going to be oh, you get a small discount now for doing it this way. So if you use one of those carts like Kroger has, and you're actually going through the grocery store and you're picking up items and you're putting them in your cart and you're watching that tally show up on the tablet that's on the cart, and you're like, okay, like here I am. I don't even have to go see a cashier. I don't understand why I'm paying these prices, because understand grocery stores include some of their overhead price in the pricing of the items that you buy. So you're like, well, why am I still paying $3 for this when I don't even have to go see a cashier? So then it'll be like, oh, well, you know what? Since you did it all on your own, since you just walked in, you were a good customer, you didn't steal anything, you went to your car, you put everything in your car, after bagging everything, weighing everything on your own, paying for everything, we're going to give you a discount. Or on your next trip, we're going to give you a set amount of free items. Kroger does this. Kroger, when you go into the store, you buy a certain amount of items, you buy certain types of items, will then turn around and send you coupons in the mail, like 12 to 18 coupons for free things, free or heavily discounted things. And sometimes they're actually in line with their sales rotation. So it's like, thanks for shopping with us. I feel like a lot of retail stores are going to start doing this, in addition to stores moving to more of an Amazon type uh sales model, retail model, where you go online, you figure out what you want, you put it all in a cart, you pay for it, you go and you just pick it up, or it gets delivered to you. It's almost like Walmart pickup, like store pickup, not just picking on Walmart, but like grocery pickup, Amazon delivery, a service similar to that. I say that because there are so many states, and I should just bring it down even further. There are so many small cities in the US already where large retail stores are completely closing to the point where if you look at that point on the map, so if you place a thumbtack on that store's location on a map and you drew a radius around it, there would be no other store like it for a certain mile radius. In terms of Target on the West Coast, there's one Target, they're closing. There's no grocery store, there's no place to buy groceries in like a 20-mile radius since that Target's closing. What makes that so sad is that you have populations that are already in food deserts in the US. You already have areas that are struggling to get by. And so now people are trying to figure out, well, what are we going to do? And, you know, when you're in a state and the laws are very lax and you can run in the store, you can go in with the empty bag, come out with a full bag, full pockets, and carrying stuff in your hand, and no one's going to chase you out. The police aren't coming to get you. that's an incentive to just keep doing it, because you're like, well, no one's going to stop me, so I'm going to keep doing it. And the stores allow this to happen to the point where they're like, you know what, we're going to close. We're just done. So, um, that's that on the Fed front. Because they don't see those things, they don't understand those things, and they just feel like, we don't understand why, when the reasons are out there. If you just pay attention, especially if you look at the news, and especially if you pay attention to the Fed regions and the Fed areas that are on the west coast of the US, you would know, like, these are real things. If you pay attention to the Atlanta region, you would know these are things that are happening. Like, it's just commonplace, and people don't feel protected. They don't feel like their money's protected. They don't feel like their livelihood's protected. They don't feel safe, sometimes even in their own communities. And so, because the Fed doesn't realize these things, it makes it a little bit hard to say that you're in touch. um I talked a little bit earlier already about the budget when I was just talking about the spending and stuff. The US, this number hasn't been black or green in a minute. The US just spends entirely too much money, giving money away to causes that we shouldn't even be sticking our nose in. But what do I know? Um, anyway. So moving on to the news for tomorrow. We do have producer price index, unemployment claims. It'll be interesting to see how these unemployment claim numbers change, since the Fed said that the numbers for jobs were uh not correct. I would love to see how they get adjusted. I also would kind of sort of like to hear what Janet Yellen says tomorrow, and I kind of don't, because she says the same thing. She's very predictable. She's going to come out tomorrow, repeat what the Fed says. She's going to be very neutral. She's not going to say anything to ruffle feathers. She's not going to do any of that until after the election. So just that's how she is. She did that when she was Fed chair. She's doing that now as Treasury Secretary. She's just likes to try to keep everybody happy and be a people pleaser. Friday, consumer sentiment and inflation expectations. I am looking forward to this news solely because this will help us to see, again, consumer sentiment, the sentiment that the Fed says they don't understand. Yeah, that's Friday. Inflation expectations, that should be inflation expectations through the rest of the year and through at least the next 3 to 5 years. So we'll have those news items coming out. And then Monday, I had mentioned to you guys that we were going to talk a little bit about crypto. So on the crypto front, it's a couple things. I think people are really underestimating the power of institutional inflows into crypto. Everyone, for a long time was like, crypto, we can move crypto. Crypto can move on its own without institutional influence. And when you start to look on a global scale and you start to look at how the world really works and how intertwined the financial markets are, you really start to realize that Bitcoin can't really function solely on its own without having institutional help to make it become more mass adopted. So, institutional money coming into Bitcoin is a good thing. Where big money goes, little money tends to follow. And it might not even be that you want your little money to follow it. It might be that your little money is in a big bank and that big bank decides to go buy crypto. So guess where your money's going? Into crypto, and you don't even know it. So it's a good thing for you, because potentially this could help financial institutions keep interest rates for deposit accounts where they are, which means that people will be more likely to put their money into a bank, which means that banks will have more money to put into crypto. So it's a win-win situation for everybody. Also, We talked about, or and I also kind of alluded to the fact of the wallets earlier. So these institutions are going to be more prone to say, hey, would you rather have a wallet or not even ask you to close out your account even? You might go to, I don't know, a Truist. You might go to Truist and someone at Truist might say, hey, we see that you have a checking account and a savings account with us. Would you like to open up a wallet account? You're like, a wallet account? What's a wallet account? Well, you will be able to take money from your checking account and immediately buy crypto, and you can use that crypto to make purchases. You ask the person, well, how's that going to be any different? Well, then you start listing out all the ways you can send money, rates are lower. This will honestly, the initial appeal to this is going to be for those people who have families overseas to say, hey, you know what? We can beat the rates of RIA, Wave, Western Union, all these companies. Like we can beat their rates. So just take money straight from your account, put it in this wallet, and then send it to your family. Boom. And they'll have it in a few minutes, if not instantly. And so that's going to be the initial appeal. Then the other appeal is going to be for people who own um, companies, businesses, to say, hey, set up a business account with us, use a wallet, have people send you payments in wallets, and you can avoid the this is how this is how they're going to try to destroy Visa, MasterCard, just Discover, and Amex. So they'll say, look, do this, and we're going to bypass transaction fees. So, you know, when you go in the store and you have to spend a certain amount of money in order to use your card or whatever, it's not going to be that way. You can spend however much you want. Yeah, there will be a fee on the back end for crypto, but you know, they're going to tout it as being lower, only, you know, fractions of a cent compared to using your debit card. So they've got this all figured out. They're just slowly trying to do this because A, you're dealing with people's money. People don't like playing with their money. People get very up in arms about their money. Um, and you know, the platforms that are going to be the easiest platforms to do this on are going to be the ones in the top five. So, you know, when you come through here and you're just really trying to figure out like what should you really look at? What should you follow? Go look at where the institutions are putting their money. We already have Bitcoin ETFs, we have Bitcoin retirement accounts and such. Ethereum is right behind it. Like they're doing the exact same thing with Ethereum right now. So, once you have all of these, um, how can you call asset classes that are linked to financial institutions set up and it's deemed safe, and I'm doing air quotes when I say deemed safe, and people feel comfortable because it's tied to a bank and banks are safe because people think banks are safe. um Here it's off to the races. When people talk about Bitcoin skyrocketing, that's going to be part of that momentum that helps crypto to really start to boom. And it's not going to be an immediate boom. It may be, but to me, in order to keep the momentum very level and give everybody a chance to get in and give the whole market a chance to just remain stable. Yeah, because you remember there are a lot of people out there still holding thousands, hundreds of thousands of coins. Can't allow price to run away to the point where people feel like, oh, we're going to dump now. No, you have to slow and steady. All right, I think I'm done.
Cool beans, cool beans. And with that being said, um, let me Mm. So we was looking at Corman screen, the coin market cap um platform, and on the coin market cap homepage, you see the top 100 performing cryptos, right? Um, you go to page one, home page. So we see the top 100 cryptos. Mm. And if you go over to page number two and come down to 105, we will see Dogcoin. I know y'all guys been seeing me post a lot about Dog. All I'm gonna say about Dog is that if you were ever looking for, or if you was ever hoping for, um, another opportunity like Bitcoin, um, other than Bored Ape Yacht Club, this is probably gonna be the closest you ever get to that. So I shared the link in the Telegram group all across social media. Like I said, Dior, do your own research. Go and read up on the Ordinals protocol. Go and read up on the Runestone protocol and the Runestone airdrop, and just educate yourself a little bit more about the free and fair movement that is Dog, and get involved. Get involved. I'm definitely bullish, Dog. Really, 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 really bullish, Dog. And not financial advice, but check it out. Just please check it out. So, and I'm looking to be in this coin for at least 5 to 8 months. 5 to 8, 6 to 12 months. I'm really looking for this thing to explode like around the third quarter, the last quarter of the year. October-ish going into December is gonna be a real exciting time for Dollar Coin. So with that being said, I appreciate you guys coming out tonight, tuning in, getting this knowledge and empowering yourselves. Let your family and friends know you love them while they're still here, please. And as always, peace and love, everybody. You know.